Welcome. My name is Len Lane, and I am the founder and president of Brokers for Life, Inc., and we are Dominion Lending Centers in Western Canada. The topic of our podcast will be about what we consider to be real-life mortgage solutions. Welcome back. Season 3, Episode 1, the 25th. I guess that's our silver anniversary in podcast. My guest today is Elena Robinson, and she is the Vice President of Residential Sales for First National, nationally, right?
Yeah, across Canada. Hi, Len. How are you?
I'm great. How are you?
Good.
Welcome to the podcast. It's, of course, we're recording from the studio here today, and let's introduce you to the audience. Maybe give us a background in your industry, in the industry.
Sure. Every time I talk about my background, it sort of tells you how old I am because I've been in this business for over 35 years. I actually started in the trust side of the business. It was called Victorian Grey Trust, or as we jokingly used to call it, vicious and greedy. I don't know if there was, I don't believe they were located outside of in Western Canada. And I've only ever done mortgages. I, started at a very young age and sort of never had another career change other than progressing in this industry. And then I ended up at First National at when they were just a little startup company. And I think I was like either the 8th or 10th employee. So yeah, it was a big leap of faith because, I had come from these major big trust companies and I had worked with some of the individuals, like one of the owners, Maury Tawes, and we can talk about Maury and Stephen, but Maury worked for Central Guarantee Trust. You know who else? Doug Farmer. Doug Farmer from First National also worked at Central Guarantee Trust. And Scott McKenzie, the gentleman who hired me to come over to First National as their very first BDM. So, and, I did eventually leave. I got married and became a mortgage broker for over 20 years. But it's amazing to see the growth of this little startup company of First National to where it is like 1,700 employees now and across Canada when we were just a little operation in Ontario. And that's because of Maury Tawes and Stephen Smith.
Yeah, and the size of it is. I'm a shareholder, so I'm blowing up here some more.
Me too.
So it's amazing to watch what they've done, what he continues to do. I don't think retirement is in his sights as it isn't in mine either. But
oh, Stephen? Oh no, yeah, I think he's in his early 70s, and he just keeps like, as you know, he obtained Home Trust a couple of years ago. He's, part owner of Canada Guarantee. And yeah, he's nonstop, that gentleman. But it's funny because people don't know that, Stephen Smith and Maury Tawes own First National. And from, how they started was Maury worked at Central Guarantee Trust in the mortgage department. He was like the manager of the mortgage office. I actually worked at another mortgage office, but and then he met Stephen, and Stephen was trying to sell mortgages. He was an investment dealer for a small boutique company, and that's how they connected. And then they thought, well, why not build a company where you deal with mortgage brokers and pay them commissions, and the rest is history.
Yeah, and have solely built on mortgage brokers as well is one of the things that we always appreciate about it, that we're not competing with you at a branch level as well. So.
Yeah, it's funny. Over the years, there have been conversations about, direct to consumer, but we've never gone down that pathway. It's our mortgage brokers have been, the reason why we are successful, and, we don't want to change any of that success or the process. So yeah, no, we're strictly mortgage brokers, no branch network, no direct to consumer, on our website, nothing like that. We actually even have a lead generation sort of thing where, and surprisingly enough, we do get a lot of requests from customers that come on our website and want us to do mortgages, and then we just kind of redirect it to our mortgage brokers. So
yeah, no, and that's a formula that has worked for several lenders as well, right? That
yes,
not being a I don't know, competition, I guess, for the mortgage brokers makes everybody appreciate what you guys do that much more, I think. So, and we kind of covered our first two questions, talking about Stephen Smith as well, of course. Ongoing story. It's interesting to hear that my wife started in the industry about the same time, but for two gentlemen you may have met over the years called James and Jerry. She actually worked for them at Bridgewater Bank.
Oh,
at
yes.
PAFCO, and then Bridgewater Bank, and then Resmore. And when Resmore got sold out, she was the first person to quit because we were getting married. So that's
see?
So 30 years of background history for her, 15 of them with me, and probably actually more than 30, probably 35 in the industry as well. So
very similar to sort of me, because when I got married, and I did get married to a mortgage broker, that's I joined. The unfortunate part is you're still happily married, I am not. So I did go back to lending right after that. So
right. And it's interesting. There is no brokers for life without Margie, because she does all of the background stuff that I would be terrible at, and I deal with the lenders and the agents, right? So our split is pretty balanced that way, I think.
It works. Yeah, it works for you guys.
I
Great.
Stay out of her hair, she stays out of mine. We're perfect. So a little bit more maybe about First National and what that ideal client looks like to them.
That's a good question, because I think my answer would probably echo the majority of the other lenders out there. And, of course, you always want the person who makes their payments on time. You want a marketable property, of course. You want someone who's built a good net worth and, solid credit. Yeah, pretty much the 5 C's of credit. I think that really applies. Now, that's, again, on the prime side. We have both sides, right? We have our prime side and we have our alternative side. I always like to put data out there. If you look at our average Beacon score on the prime side, it's 760, which is really good. Very
healthy, yeah.
Yeah, very healthy. And even on the Excalibur, people are actually shocked when I tell what our average Beacon score is 716. But that really tells you the strength of the clientele in the alternative side. I think sometimes the misconception is that, if you fall into that bucket, that your credit tends to be not as good as the prime side, which is, I think it's a bit of a fallacy. Now, I'll admit, we don't, on our Excalibur side, don't do anything below the 500 range. There are other lenders that do, and they specialize in that, and, great for them. But yes, we do have a certain clientele that we deal with on the alternative side. But no, we have great clients. I mean, returning clients. It's funny, just a short little story. There was a broker recently who talked to me about a client that he unfortunately had taken out of First National, at renewal, and took it out. And then the client actually kind of gave him heck and said, "Why did you do that? I love First National. They got a great portal. Customer service is fantastic," So, it was a heartwarming story for us to hear that, the client really likes dealing with First National. And we are very, I would say, customer-focused company. Like, we always want to be available, be proactive with the clients, because then it really makes the broker look like a superstar. That, you didn't put us with a company that doesn't appreciate them as a client.
Yeah, lots of comments on the portal. I'm actually have a mortgage with you as well. So not only am I a shareholder, I'm a client. But that's one of the easiest things I think we've seen. We've had our mortgages with the banks and stuff over the year. It took a long time to get away from the bank eventually. But it's, the ease of going in and see what I can do. And if I want to make that extra payment, which is how we kind of set it up, that, it's quite simple process to do that. So that is definitely an advantage. Not that there are competitors, ones who are quite easy to use, I'm told as well, but I've never had a
Yes.
mortgage.
Yeah. Well, it is true because, it's word of mouth. It's what the customer, like, it's the biggest investment of their lives. For majority of clients, I would say that is the biggest investment of their life. So you wanted to make it like a smooth and easy and rewarding experience because it is very, very important to them.
Right.
Because it is that big part of their lives.
It's probably 97% of the people in the world, in the country, that it is their biggest investment usually, right? So
it is.
So with that said, what products are your most successful, do you think?
Well, of course, our 5-year insured business has always been our biggest, I guess, top seller, if you want to call it that. Yeah. I am seeing more of the adjustable rate. And that's just with the times based on what's happening with the prime rate and, the reduction of what we're seeing happening. And I think that's become more popular for people. If you were to ask me about our niche products, like, what seems to stand out, I would say on the prime side, our stated income, where you don't necessarily have to provide all those documents that you need. It's based on a projection or like, here's your gross, here's your net. This is somewhere in between that we use. We don't need the tax documents so much. Medical professionals niche, that seems to be really gaining ground and growing all the time. And the rate option plus, I think that half price or shared buy down seems to be very popular. And yes, this business is very cyclical, right? It changes with what's happening with the market. And currently, that's what I would say seems to be our most popular. In terms of our Excalibur side, the alternative side, stated income, yeah, we do a lot of the stated income. And, when we launched Excalibur in 2018, and that's how I actually came back to First National, because I did start with them, but I was away from them for a while. And then I was hired to come back to First National to launch the Excalibur. And that was essentially to provide solutions because of those things that, when the government changes happen with the stress tests, BFS clients were finding it more difficult to get mortgage financing. And that was the reason why we launched Excalibur at the time. So that still to this day, I would say stated income where you only use bank statements as a process for qualifying. The other one would be those temporary clients. Those clients where something's happened to their life. It could be a divorce, it could be a death or sickness. And, their life has been affected, usually their credit. And this is a temporary solution for them that they're going to clean up. And you're usually the brokers helping them to get to that, back to that status. So we see a lot of those temporary clients where they're just in there for a couple of years to get them to that stage to move them back to the prime side. And that's where we see, because of our graduation program too, where, you can move it over to the prime side with no cost. And so those, if I break it down, those seem to be the most popular products that we have on both the prime and the Excalibur side.
Right. And it's interesting because we see that on the B product, as A, B, and C product
Yes.
is how we look at it, right? Like you said, that credit score being 716 is at one time that was golden. But again, the TDS and GDS being able to extend that out, is it 50 with you or 60?
Yeah, 50-50. We are, there's a new program product that we're working on, Excalibur. You're one of the first to know, but I'm hoping by the end of Q1 that we'll have it up and running. So it'll be even higher, better solution, more helpful solution, I guess, for those clients. BFS clients, surprisingly, their credit's really good. So I think that what that's what brings up our Excalibur 716 average beacon score. It is mainly the business for self clients. They're excellent clients to have. And really, when you think about it, they're the backbone of Canada. So many small businesses help this country. Especially with everything that's happening.
And yet we tax them to death.
And yet we tax them to death. Exactly.
Yeah, trust me, I know we're just doing taxes at the moment. So it's kind of interesting to see that the growth in that industry is, again, like you said, ebbs and flows. I always joke about how I always watch every year that everything changes. Somebody will be the top one year and change their programs and be back at the bottom at the end of the year and stuff like that.
Yeah.
But the lenders with that B product, and in your case, where you can actually easily take them from B to A, is more and more prevalent every day, I think. And as the rates come down, of course, they will qualify hopefully in a year or two to move from the B to the A. So
rates go down, their incomes go up. There's a lot of factors, but majority of them do eventually move. BFS clients don't, I have to admit. And again, as you mentioned, the taxes, it is a better solution for BFS to pay the slightly higher rate than to pay higher taxes.
Yep.
And it's just logical.
I have a client who's been in a private deal for a decade, probably. Only because he doesn't want to pay Revenue Canada any more than on $25,000 a year, and he's quite happy to pay the extra points on his private lending and have to send less to Ottawa.
And he's saving money, I'm sure.
And probably in the long run, he hasn't figured out that he is, so that's all that matters. He's happy with it, and we've had to move him around a couple of times because some people keep going like, "Why are you still here?"
Because there's always that exit strategy, especially on the private side. Right. I mean, that's what brokers do a lot. They work from C and they move into B, and then they move into A. And
that's what I tell everybody. Don't let the deal go. Let's have a look at it. If it's viable to be in a private lender to begin with, then to work with the client to be a year from now, 2 years sometimes. Move to a B or soft B as I call them, and the 5-year goal is to have them back into an A term at somewhere down the line, right? So work hard with them because you're going to get paid 3 times, right? So
and then get referrals.
Exactly, and they will tell everybody. Trust me. So
they will tell everyone.
Yeah. Okay, so those are all the clients you like. Who are the clients that you don't like to see?
I wouldn't say the ones that don't pay their mortgages.
Okay, not the obvious ones. But.
Not the obvious. Probably the weaker client being, maybe the lower beacon scores. And by the way, just because our average beacon score is 760 doesn't mean we don't look at, lower beacons. It just so happens that's our average.
Yeah.
But yes, of course, we look at even on the prime side. I wouldn't say necessarily the clients. What I would love, or I think as a lender would love, is better notes on deals. Because yes, you could have that weaker client, but if you have a great story, if you can explain, everything about that deal, I think you have a better chance of getting that deal done. And I think that's where the struggle is sometimes. Just getting a deal in and saying, "Good deal, please approve." It helps the lender to get an overall picture of that client, right? So where if you don't have any notes, you could possibly think that is a weaker client, when necessarily it may not be, because there is an explanation for where maybe the credit is slightly weaker or lower than we normally see, or something about the income, or something about some change of business. That I think is more important if you can provide a better notes for your files to allow the lender to really review and look and open up their minds to the possibility of making that deal work. I think that makes your client weaker if you don't provide that sort of background and information.
And that's part of our training, right? We train a lot of people. Some are trainable, some aren't. But especially about the notes, there are some templates out there that we start them with those, and then kind of elevate that to the next step where it's like, don't explain the obvious. They can see the credit score, they can see that, but explain the R2s, or if there's a missed payment, or why is there a gap in the employment, things like that. Don't do the background stuff more than saying. And I know it's a bank rep that's working with us. If they say, please, I approve this, I recommend this for approval.
Yes, yes. Yeah, and that's it.
Nice of you, but that's nice, but that wasn't up to you anyway. It's taking those things that are in the background, explain it out. Why is there a big lump sum payment? Is it a gift? Is it, what are all the little nuances of the deal that, yes, will make the underwriter go like, oh, okay, well, I'll go look at that, and we'll make sure that gets okayed if it's viable and stuff like that as well. So
it makes the client more than just a number, right? You really for us, we really are really dedicated to making that experience for the client important, right? Like the worst thing for us, honestly, is if a deal doesn't close on the day of closing, and the thought that client is in that truck with their family and they can't move into. So we really do want to make this more than just another deal and another transaction, another number. That's why it's so important to explain as much as you can about that client to us.
I lose my mind when I find out that somebody's not getting their keys.
Oh yeah, so do we. So yeah.
I'm like, it's funny. I did a podcast that's coming out after yours is with Reuven Gorst at.
Oh yes, I know Reuven.
Right? So
yes.
It happened to him actually himself, right? And of course, there was one piece of paper missing, and they had packed their house. So guess where the paper was, right? Somewhere in a box in a truck. So Friday they ended up spending like 4 days in a hotel until they could get the keys. So I'm going like, yep, my worst nightmare in 18 years. We just had one recently, but
did you? Oh, yeah.
But that was not very well communicated by the lender. Let's put it that way. It wasn't you guys. It was.
Oh, thank God.
yeah. No.
I was gonna say, please don't tell it was us. Okay.
Yeah, no, it wasn't. But and at the last minute, they're like, oh, we need this. Well, or this doesn't match now, and a bit of both, client as well as the lender, but just to stop the process and have to go a long way up the chain to get
it to close.
Get somebody to look at this, because it really wasn't that big of a problem, I thought anyway. But we did get it closed, so that's the important part. But client again in a hotel room with 3 kids for.
Right. You don't want that. You don't want that experience, especially if it's their first home. You don't want that memory etched into their brain and they'll never forget it. And, of course, that you'll be part of that.
Yep, you'll hear the story for the rest of their life, right?
right, exactly. So that's not something that we ever want to happen, right, as an experience.
Yeah. I do know there are some scenarios that don't work well for you, and private deals, obviously one, right? That we see a lot of extra due diligence on your side, which is.
When you mean private sales, is that what you're? Yeah.
So
but we should still we still do them, but there's
plan for a little extra time. That's all.
Yeah. Do you see more of these private sales happening just because of how the market is out in Western Canada?
I don't think there's a large amount of them at the moment. Just personal ones that I've had over the years. It's of course I make them do appraisals and everything up front and get all of that out of the way, right? So that because we know that's coming, right? Private sales are always some extra due diligence needs to be done and should be. Don't get me wrong. And then it's of course in-house. There's some extra steps that First National needs to take, but that's but we know that. And that's one of the beauties of knowing your lenders as well as you can. And you can recommend to new people, don't bother sending that there. That's going to set off a whole bunch of other things, right? Red flags and stuff like that. So maybe not red flags, just extra due diligence and extra time if you're in a rush. So yeah.
Well, especially now with all the new rulings of, AML and doing that extra, due diligence that the brokers have to do.
Yeah. It's, we're fortunate that we have Velocity because that is built right in.
Oh, great.
And we only work in Velocity. We shut down Filogix well over a year and a half ago, probably now. And everybody has to work in there, but it's built in. It's I can't imagine at one time we were Filogix and Finmo and Velocity, and finally got everybody just said, okay, makes no sense. And you can't so much to for our own compliance because we do audit every day, right? Which is probably not the same as everyone does, but that's just the way everything they got open the day before we look at, make sure that service agreements and all of that are in place. But yeah, when you start to try and do that and then to try to do payroll based on 3 different platforms, it just made no sense.
Well, that's a nightmare.
yeah, exactly. And then of course, when the AML came out, it was October 11th. It was there. It was in there to go check the boxes, check ID if you don't have a 3 years credit bureau, and that was all up and running automatically for us. So thank God, because really, I can't imagine having to do that manually. For one.
Well, I do know of some brokers, some independent brokers who have, again, joined like the Velocity for that purpose because, it was something very different. A lot of work for somebody who's not from a big company that was able, and it was a great solution to move over to that platform for them.
Exactly. So 2025, already into it a bit. Your year end is the calendar.
Yes.
What is the forecast for First National for 2025? Or a ballpark? You actually might even be able to say it. I get a lot of people that on the podcast go, well, that's not my department. Sort of thing.
No. Again, these are my opinions, usually formed from watching different economists in the last couple of months. If I were to say, I would have said, if you asked me before Trump, I would have said very optimistic for 2025. Post-Trump, I would say cautiously optimistic. And there are several reasons why I say that. So if I look at our fourth quarter, actually, fourth quarter was great. It was really... I think because of all those decreases in the prime rate, we had that 50 bip drop. And I think most people started seeing, people were coming off the fence. They were feeling a little bit more comfortable. They saw, based on projections, that, the prime rate was going to probably drop to about 2.25, 2.5 in 2025. That was the expected drop. So we really saw a great uptick in fourth quarter. January was really good too. Now Trump comes in and I call it the Trump factor, and then all this talk about the tariffs. So I think from what we've seen, and I just saw Benjamin Tall last week, this has sort of tempered the marketplace a little bit, in terms of now I feel people are again sitting back and waiting. And I think there's a lot of reasons, on employment. They're concerned about their employment with what might happen with the tariffs if Trump brings them in. Benjamin Tall thinks it's just a tactic on Trump's part. I hope that's the case. We all hope that's the case. But that's his feeling, is that that's what Trump's doing to get some things, moving. But that's why I say cautiously optimistic. Let's see what happens. Will the tariffs make that much of a difference? Will people lose their jobs? Will that affect people not wanting to buy in the next few months? So cautiously optimistic. So I have gone from optimistic to cautiously optimistic. I think we'll still see some rate drops happening in the marketplace because of the volatility that's happening. We'll see. So is that a good answer? At least I answered it. But
that was very diplomatic.
Yes. I hope Benjamin Toll is correct. I hope that what he was saying. I did see another economist 2 weeks before that. They don't think tariffs is going to make that much of, like when you really look at the numbers, it might increase prices by, a small amount. But media has a tendency to really blow things out of proportion. I think sometimes it makes it so, like even the condo market too, in Ontario, we're seeing some effect on the condo market. And it is, especially the new builds, because the values are not coming in based on when they purchased it 5 years ago. But Benjamin Toll said, yes, you're going to see that, but developers have stopped building. So in 2 to 3 years, when people are looking, there's not going to be enough supply again at that time. And he said it may be difficult in, let's say 18 months to get a good price for a condo. You could probably get a good price now. But again, these are opinions from the economists. They go to school a lot longer than I did and sometimes economists are like weathermen, right? 50% of the time they're right and 50% of the time they're wrong.
That's one of my podcasts.
Oh, is it?
One of my blogs was Economist, the weatherman of finance, right 50% of the time.
Oh my God. Perfect title. Yes, exactly.
It's kind of, we're calling it being trumped. But if you read The Art of the Deal, that's go big and loud and boisterous and see what happens, right? And first thing that happened was that Canada had a knee-jerk reaction. If we had somebody actually running the country in general, like if Parliament was actually open, they could be doing something constructive about it. And of course, at some point this year, there will hopefully be an election. So lots of turmoil within our own government along with him. And I think you just saw it as a weak spot for us anyway.
Exactly.
Let's throw this out at them now because they're all disrupted and all of that stuff. So there's no question as far as sales go, Donald has it pretty much figured out. But again, will we get the full another 1% this year? I don't think so. I'm a little cautious with some of my clients on the variable because, of course, as the rates come down, the discount shrinks. Obviously, that's just to make sure there's still money coming into you guys. But that when the 0.9 was there for a while, I had 3 or 4 clients. I got into that. We still have some clients who are on the last, holding on to the last breath of 1.25s and stuff like that from the early 2000s, right? So it's early 2020s, I guess. So it'll be interesting to see. As far as we saw, January was our best January in it equaled the January of 2021.
Which was a great year, the pandemic years.
That was a good sign. We'll see what February, the pandemic, the big pandemic year, right? Where we were up a crazy amount of business. But we'll see what February looks like. It feels like it's a little slower. But again, people are kind of going, are the tariffs going to make that big a difference? 10% on oil sounds like the refineries would just absorb that in the States anyway. The lumber guys, of course, the lumber guys are, the softwood tariff came in the 80s. And I know that because I had tractor trailers going back and forth to California and the loads disappeared basically on lumber because nobody wanted to pay tariff then. But now they're saying their tariff will actually be up in the 40% range. So with an addition of 25, right? So, lots of different economies. Of course, Alberta is not just oil. We raise a few million cattle as well. So there'll be tariffs on that and a few other things. So it will be interesting to see for the auto industry, of course, in Ontario. I know the numbers down there must be down. And as our good friend Mr. Butler talks about the dog crates all the time, but you're right. So the builders have stopped, right? So Ben's right. So it's like, you can get a deal now because people are in dire straits. They need to sell them one way or the other. And, 3 years from now, that'll get absorbed. It's inventory and it's like any other inventory. once it gets used up and the prices will come back. Will they be as high? Maybe not, but and they not as high as their peaks anywhere. Where the 500 square foot was what $750,000 probably at one point. So, but it's always interesting to forecast, and it's pretty much impossible to budget for a mortgage brokerage, as you probably know from the past. That are pretty hard to hit the numbers. There's only one thing that we've always done, and that's kept our overhead low, because it's just the fixed cost. We can manage that, and then it's just figuring out how the cash flow will go through the year. And there's always something interrupting it, it seems, right?
Well, if we could predict, we would be making a lot of money. And
that's true. Yes. So
yes.
Yeah. Not that we're not. Don't get me wrong. We're not complaining.
Totally,
The industry's been amazing to us over the years.
Yes.
Team of 38 agents at the moment, so it's always teaching, and that's a big part of what we do. We've got, I think we've got a dozen people now at different stages of learning with us. So that's always exciting to see. And First National, of course, is one of the ones. We get them in front of Serena, usually pretty early in the process as well. So
we love getting the new brokers right off the bat, because it truly builds loyalty. And if you train them and you're really invested in helping them start the business in this business. Like we talked about this earlier a little bit, like nobody goes to school to be a mortgage broker, right? You just kind of eventually fall into it. And surprisingly enough, because I see all the onboarding that's happening, continually seeing people joining this business, because it is a great business to be in. You can make a very good living doing what you're doing.
Yeah. And that's after many years in a show home, like here it runs from, so we would start, Friday was a day off. So Saturday through to Thursday was the work week, right? So somebody asked me why I didn't go into real estate after that. And I went like, because of that, exactly that. I've already done my time in there. So, I see my real estate friends, and we have a lot of them. One of our top agents is married to a Remax owner. But, it's like, how do you get away for a holiday from real estate? Because it's such a one-on-one business. Where mortgages, we've done mortgages from Ireland. We've done it from Sweden. We've done it from Mexico.
Really?
More years. Well, yeah. So VPN, connect to Montreal or connect to Vancouver. Right. So, and now even more so with systems like Velocity, and I'm sure some of the others are similar, that, it's the phone packages have changed. Right? Go to the Latin countries or Central America and stuff like that, and the phone still works just like you were at home now, right? So it's always interesting to see that. I never planned to be this. I was trying to build a trucking company, but softwood tariff got in the way.
Tariffs again.
Tariffs again, yes. But it has been very good to Margie and I, and our whole team. Actually, there's lots of them who have made, in some of them, in case of well over millions of dollars in commissions, right? So it's good. So I want to thank you for your time today. I know you're a busy person, and
thank you, Len.
We're great to catch up on what's going on at First National, and a little bit about yourself and how it came about. And
well, no, it's been a pleasure, Len, and I've enjoyed myself immensely, and it went by so fast. I tell you, I feel like I've just been talking to you for 5 minutes.
There you go. Excellent. Great. Okay. Have a great day.
You too, Len. Bye-bye.
Thanks for listening today. I hope you found the information that we provided to be useful in your mortgage journey. And remember, you can always find our associates at www.brokersforlife.ca/associates. Have a great day.